Welcome to today's Rich Dad Stockcast with Andy Tanner, and today we're diving into the fascinating story of the GameStop short squeeze that shook the financial world in early 2021. Many of you may remember our first episode on the GameStop revolution, and as of just a few days ago, this story resurfaced as GameStop's stocks rose 60% and short sellers lost more than $2 billion. Now, because we're about to talk about a very specific stock, I have to say this or Andy will reach through the internet and kill me. This is not financial advice.
I would never kill anybody.
How about this? Andy said go buy GameStop. No.
Oh my gosh.
Andy would kill me for that.
That's not a killing, but it's certainly a spanking at minimum.
Fair enough. Right. So the point being, this is not financial advice. Andy's going to use GameStop to teach us some lessons, give us some education, but he's not telling you to buy it or to sell it or anything specifically to GameStop. How do you feel, Andy?
Nice.
And last, before we get started, no, not last, hit subscribe, do write things in the comments, especially with this Reddit thing going on, because it is happening right now. But visit the new thing Andy set up for us, stockcastbonus.com. And Andy's giving us some free education there that you can go and check out anytime. I think it's a little deeper dive. Andy, do you want to explain that a little better?
Yeah, what's cool is we thought, let's create a hub where if people want to take a deeper dive in things, and every once in a while we can change it. But it is the best place if a person hears something on this Stockcast, they say, wow, I'd like to implement that, or I'd like to go deeper into that and actually do it. Stockcast Bonus, we have resources there, free stuff, deep dives where we can pull out the whiteboard and get granular and teach. And people have aha moments on that thing that are unreal. So for sure, it's funny. If you're an investor, you always look at upside versus downside. Maybe the best thing about the Stockcast Bonus is everything there is free and you can watch and see. And so you have no downside, but you do have an upside with education. So I would encourage people and welcome people. That's what we offer. So that's fun.
Well, and I'm going to challenge you already a little bit on that. Free stuff usually sucks, but this stuff is actually really good. So the best part isn't that it's free.
Free stuff, best things in life are free. What are you talking about?
No. This is really quality stuff. So I want to make sure that that's clear.
We always try to, our excitement is to make things simple for people. And the genius in what my team does is they break this stuff down and we go at a nice slow pace. And so if someone would like to have extra cash flow, that's the biggest thing. Pretty easy. Yeah, I'd like an extra cash flow stream in my life. We show people how that can be established within 30 days. Not $1 million a month, but it starts that process where each month someone says, wow, I made money in a different way than having a job. That's a huge quantum leap for most people. Actually receive any amount of money that didn't have to come from a job. Then you work on, you build it, and you start going. Get out of that rat race, man.
Absolutely. So visit stockcastbonus.com and let's go on. How do you feel about it?
Let's do it.
So I have my fear with this show because it's hard to say GameStop stocks.
GameStop, the little Peter Piper pecked a pickle pepper, right? A little tongue twist.
Exactly.
GameStop stocks. Go shares, GameStop shares. Just as hard.
All right. Yeah. All right. So, what the good thing is you have to do the talking. So let's start you talking with, can you first explain what short selling is?
Yeah. I think in this context, one of the things that the stock market brings is agility. You can, I hate this phrase, but let's just say you place a bet on something going up or you place a bet on something going down. And when you take a position, I prefer a bearish position is the language I would like to use. Say I'm bearish on GameStop. Well, I'll spout off on this and I'll start with my own personal story of it. So one of the opportunities that I kick myself for missing on the short side. I don't short a lot of stocks, but what it means is when you short a stock is you say, hey, I'm basically going to borrow some shares from the brokerage at a high price. I'm going to sell those shares on the market, And when the price falls, then I'll take those shares, buy them back, and return the shares I borrowed. So it's a 4-step process if you want to be wonky about what a short is. Borrow shares at a high price, sell them, take the high money, let it drop, buy them back cheap, and then give the shares that you borrowed back. That's a short position, technically. But it's really just bet. If you just think of it as betting when the stock goes down, that's great. So there was a stock years and years ago that doesn't exist anymore called Blockbuster Video. Do you remember that?
Oh yeah.
And I tell my kids what Blockbuster was, and they're like, "How did that ever even go?" You know, it's just, you got 4 copies of the movie, and you had to get there before other people got them. And instead of scrolling, we browsed the aisles with the other, weird, creepy, nerdy people, and you're trying to decide what video to pick up, and you had to get there before someone else got it. Oh, do you have this one? Oh, we're out. And late fees and sending the stuff back. You remember all those days.
Oh yeah. Be kind, rewind.
Yeah, be kind, rewind. And my Netflix comes out. Netflix actually started just door dashing it. Really, you would do it by mail. So all Netflix did when you started, there was no streaming. You just simply say, "Oh, I want this," and they'd send it to your house. So you had to kind of plan your movie that you could always get the movie that you wanted. So Netflix starts coming, they start growing, and the obsolescence risk is what we're really talking about. Is as technology grows, Netscape goes away, WordPerfect goes away, US Robotics gets, it's the Garmin GPS, all this stuff. It's tough. And you could just see that with streaming, as soon as we started streaming videos, Blockbuster was either going to innovate or die like that. And I kind of saw it coming on their financial statement. I was like, man, these guys are bleeding cash and they're going to have to close stores. And I'm like, they're in trouble, but I never pulled the trigger. Never did. So a couple of years after Blockbuster went bankrupt and their stock goes to zero, I mean, it's just would have been the best short in the world. I'm looking at GameStop. I'm like, that's the same damn store. It's the same thing, right? And you got video games going to be downloaded. And so this time I thought, I'm not missing out on this. So I bought something called a LEAPS, a long-term equity anticipation security. And the reason is it's an option. Okay, it's an option to sell it high. And the reason I did that instead of shorting it is my risk was limited. I paid one premium. That's my max risk. And now I have the ability to sell this high. It's another way to take a bearish position. And I can't, don't hold me to the numbers. I can't remember. I want to say it was probably like $15 or, whatever it was, $10, whatever it was. And it went for like 15 to 5 or whatever it was. And I made my money and I got out and, yay. I didn't screw up on that one like I did Blockbuster. I hit that one. So about a year after that, it became pretty obvious that this company's going to die. I mean, it's just, there's a few video game nostalgists, I guess, if that's a word, that really like the old style stuff. And you'd see their stock, the biggest bump it had was before the Reddit crap, was that Xbox came out with one more console that had a DVD player in it where it wouldn't be. Right. They're like, oh, thank you. We got little life left. And so these hedge funds, they got in what's called a short squeeze, and they became so leveraged. They were so sure this thing would die. They said, this is, we can see this coming a mile away. This thing's going to die. That these hedge funds made massive, massive bets, and they actually did take short positions and leverage positions. And, some guy under the name of Roaring Kitty gets this idea, and it was brilliant. And the lesson in it is it teaches the detachment from fundamentals and price. What do I mean by that? Well, you have the financial statement of the company, which is the fundamental strength of the company, but the price of the company is based on supply and demand for the stock. So if someone gets excited about the stock and ignores the fundamentals, the stock price can become detached. It can get really high, and it can also get really low, depending. So this Roaring Kitty guy wants to kind of rally up the Reddit crowd and say, let's stick it to the rich guys, which really people get excited about the chance for the David to take down the Goliath and smack him in the head with a rock. And so he says, these guys are very vulnerable, which they were. You can look up the short, what we call the short interest. You can see how many shares are available and how many have been borrowed. And it got close to, a theoretical number of almost all of them where they were, you borrow them and they're still owned because they're sold to someone else, but they've been borrowed and sold instead of just bought. And so the short interest was just massive. And this Roaring Kitty dude, I'd never even gotten on Reddit until this. I opened a Reddit account just to watch the show with my popcorn. And this guy says, hey, let's stick it to these hedge funds. Let's stick it to them. And let's start buying the stock, because it doesn't matter how crappy the business is. If we buy the stock, the price of the stock goes up by supply and demand. It doesn't matter how bad that company is. If we all band together and we all come with our pitchforks and torches together, we all just have that leap of faith to buy it, it'll drive the price up. Well, what's interesting is that causes more buying. Why? Well, as I said, how do you short a stock? You borrow the stock and then you sell it at a high price. When it goes down, you have to buy it back. What if it goes up? You start losing money because you'd have to buy it back even higher. So the way to get out of a short is buying. And when people get out of the short, it causes a bump in the stock because they're buying stocks. And so, that buying caused people to have to cover their shorts, which caused more buying, and it fed on itself. And the next thing you know, then people get attention. Then they want to buy it to get on the upward movement. And the thing it was like tulipomania. It was completely irrational. It was completely nutty. And so many people lost so much money. A lot of people gained it and then lost it. And, the Roaring Kitty guy who kind of led this thing, I imagine he just made a ton, because he had options on this, I'm sure, before. Probably had call options, was leveraged, and he probably just made ridiculous amount of money doing this. And the sad thing was, Greg, and we can talk about this maybe when we come back from break, is the role Robinhood played in this. As a brokerage that is the poster child of invest with no education. Let's hand people guns with no gun safety. And they had some shenanigans along with this, and they had to freeze some trading, and they got in trouble for some stuff. But that's basically the round one. So now we're going to hit round two. Maybe when we come back from break, we'll talk about the resurgence of this mess. And is there an opportunity to make money with it? Is there an opportunity for people to capitalize on this or no? And what am I going to do? I'll share with you what I'm going to do about it.
Yeah, that's what I want to know. Like right now we're talking about there's Wall Street, these giants, and we're calling the Reddit people the little Davids. But when you put all those people together, they're their own giant. And
yeah,
so,
they are.
To me, it's giant versus giant.
Well said.
How does Greg, get his piece of this? Because I'm not part of either giant. So I am curious how I can take next time, how I can see this unfolding and where I should jump in and where I can get my money and where I should jump out. So I'm curious on a personal level, since I am the David here. I'm not either giant. I'd like to know how I can turn this to my own advantage. So let's hit that when we get back. And like you said, we'll see what happened in round two, which just a few days ago, it started all over again with Roaring Kitty. So let's check that out when we get back.
Awesome.
So far, it's been great. I needed a source where I could really enrich my education through stocks. I didn't really have an avenue for it, and it's helped me a lot. The simplicity has really gotten me on the track to where I enjoy the learning, as well as it's really solidifying in my mind. And they're not just trying to sell you something. They really care about the people that are in the course, and they really do care about you and your personal goals, and what you want to do is to help you and your family and whatever your goals are in life through that. So it's really been great.
Welcome back to Rich Dad Stockcast with Andy Tanner, and we're about to find out part two of this story with the Reddit GameStop stock Shorts. I don't know. Whatever that is. We're going for round 2 because it just looks like it reared its head again.
Popped
So Andy's
in.
going to let us know about the sequel here. So what's going on now?
Well, we know for sure that there's gravity to fundamentals. I talked about that detachment, that it's always temporary. I mean, eventually you've got to make money. You've got to produce something, and it's just tough for GameStop. They've gone through some CEOs, and I was laughing. My kids were laughing their heads off. The CEO comes, they replace the CEO, and they say, I'm going to save this company. And he goes, talk about a guy that's probably my age that's totally disconnected from the gaming community. He's like, yeah, we're gonna turn GameStop stores into these lounges where kids can congregate and play against each other. And I'm like, dude, my kids got their headset on. They're playing against someone in Germany through their headset, dude.
Absolutely.
And my kids, I told them about that idea. I go, do you think that's going to work? And they were hysterical. I mean, they were laughing their head off. Like, yeah, we're going to go hang out at GameStop, on their couches when we can sit here at home with our headset and do it. I mean, come on. So they're trying to make it this social type of thing where it's just social's changed. So anyway, but we did predict and know that this would have a spike, and then it kind of bounce and bounce and bounce and, kind of go down and settle and then die. And so, there was a temptation to resume the short because that you absolutely know that the fundamentals they stink. What did happen, what was interesting is once the price went up, there's always a percentage of the outstanding shares that the company is going to retain. So it did give them a breath of life where once these went up, they could liquidate their stocks and get filled with cash again. So games, yeah. So if you look at this from a financial, there's a lot of lessons in this that are really powerful. If you look at a financial statement, at least 2/3 of it, the income statement, the balance sheet, you basically got 4 boxes. You got expenses, which is the same for every enterprise. We got expenses going out of a business, out of a household, out of a school, out of a government, out of GameStop. So the expense box is there. So you really have 3 other sources to answer those expenses. The first one is the income box. We might call that new money, and that's where you really have to be. That's the only long-term viable source to address expenses is new money. You get a new bill from, your cell phone company. Well, how are you going to answer that? Well, you could do it 3 ways. You could do it with your new paycheck, new money that came in, or you could do it with old money that you saved under the mattress, or you could borrow some money to pay that bill. And those are the only 3 columns: income, assets, and liabilities. So you could relabel those as new money, old money, and borrowed money. It's a great way to make it simple, right? Great way to look at it. So GameStop didn't have any of it left. They had no new money coming in. They didn't have enough old money saved, and they had borrowed about as much as they could, and they're just dying, right? The moment new money stops, you're on an hourglass. Imagine if you lost your job and income stopped. You'd sit down with your loved one. You'd say, how much money we got saved? What does the old money look like? Well, now you can do the math. We got 5 months before we're bankrupt. Okay, well, how much credit do we have? Oh, we could borrow X amount. So we got another 2 months in credit. And so 7 months, we better get that new money coming again. So you basically have time. Well, when GameStop went up so high, they sold, the company says, let's sell our shares and replenish our financial statement with some old money, that you can have in savings. And sure enough, they're still bleeding cash. They're still not profitable. And that money's starting to shrink again, right? Starting to shrink. So the fundamentals of GameStop really haven't changed that much. And from a cash flow standpoint, it's negative. They just stink. So, my team, and we're like, well, so now we really want to short it because it's high again and we could short it again. And we're like, no, because if it can happen once, it can happen again, and and everyone's going to hop in short, and they're going to be stupid enough to lever up again. Like, why couldn't this happen again, right? It's why short selling is called short selling. The reason they call it a short versus a long is time period. If you're going to be short, that can't be a long-term thing because it's dying, right? Something that's dying is going to end, but something that's growing is going to be around for a long, long time. So that's why they call it a long position and a short position. Is shorts are meant to be like really small, and you have to get it right in that small amount of time. And so my advice to everyone is like, stay out of it. I was proud. I got my money made and on my leap before all this crap happened. I wouldn't touch it with a 10-foot pole, because if you're short, it can go to $100 a share. And it's even worse now than it was then, Greg, because they did a split. Once the stock went up so big, they're like, oh, let's do a split. So now when we see it at whatever it is, it's worth half of what it even was before. It's a really bad company, in my opinion. It really stinks.
Hold on, you gave me a bunch of questions here, so I'm gonna shoot
fire away.
4 off, and then
fire away.
I don't know who won. Did Wall Street win or did the Reddit win?
Mix.
Yeah. Well, hold on. You said Roaring Kitty.
Roaring Kitty. He won.
Whatever. He won.
He definitely won.
And then, as a general rule, do you just avoid shorts?
I don't just avoid shorts. I short my options every month. I have short positions right now, as we speak. I have my theta is probably high as it's ever been in my whole account, meaning my amount of money I receive from options that are expired. Think about this: an option's going to go to zero, especially if it's out of the money, right? If you have an out of the money option, which means it has no intrinsic value, it's going to expire. So I'm short every month because I think, okay, here I got 6 weeks or 8 weeks or 4 weeks. That's a short amount of time. So I'll sell an option believing it's going to be worthless. And so I have things go to zero all the freaking time. It's a lot easier to do that with an option because there's an expiration date on it when you know it's going to be done and gone forever. So I'm short all the time. Like most of the cash flow that I bring in from my options are on the short side, where I'm selling the option instead of buying it. And there's some risk to that, and it takes education to do it. So yeah, I love the short play all the time. Now with stocks, invest in stocks, trade options. A company like ExxonMobil doesn't have an expiration date. And so I'm going to be long them, right? We're going to be drilling oil for a long time in this world. And there's going to be a lot of money to be made in that, right? And so I'm going to be in that for a long time. The options I'm going to trade. I'm going to sell them and then buy them back or let them expire. Sell them, buy them back, and let them expire. So the education's key. So when you talk about winners and losers, let's answer that question. So Roaring Kitty won, but the funny thing is, for every hedge fund that they wanted to go after, those guys are smart. There was another one on Wall Street that traded this with an algorithm and killed it. So the narrative of they really stuck it to Wall Street, well, yeah, they did stick it to some of them. Some guys got really hurt. They had to cover those shorts, and they were successful. But there were others that are going to pounce on this with electronic trading algorithm. They're going to make a mint. And so, the idea that you can stick it to Wall Street's just in a better position most of the time than anybody. The ones that really lost, the ones that lost even worse, I think, than the hedge funds is, big fancy hedge fund guy. Maybe it even goes out of business, but that dude still has a yacht and he'll just start another hedge fund. The one that really got crushed was the uneducated investor. They got their face kicked in because they get on Reddit and they break the cardinal rule of investing in something they don't understand, and up it goes. The next thing, it's gone from, $3 or $5 or whatever it was to, $200 a share on the way to $400 or whatever it got to. They're like, oh, great. And there are a lot of people that bought this thing for hundreds of dollars, and now, it's just not worth that anymore. Then it split, and then it went further down, and they lost their shorts because they're believing people on Reddit with no exit strategy, with nothing. So yeah, I don't like GameStop because what you're trying to do, Greg, is you're really trying to make money the wrong way. And maybe I'm being altruistic here, but there's a principle of serving people in business. The late Charlie Munger he said it this way. He says, "Is all you do is become rich. If all you do if all you do is be successful in life by getting rich by trading little pieces of paper, it's a failed life. Life is much more in wealth accumulation. When you go to the Berkshire meeting in May, it's a celebration of what they offer, good products. Like, a guy buys a box of See's candies and gives them to his girlfriend for Christmas. That's cool. I go to the ball game and I get that Oscar Mayer hot dog and I put that Heinz ketchup on it. That's value to me and my son. Enjoy that hot dog. I go to the gas station. I get to go to a national park because I can fill it with Chevron, and they've given me fuel to get my family to a great place, and on and on and on, where there's value. And I gave value to the world with what I was involved in. This stuff with GameStop violates those principles of ownership and serving. You've got a company that's dying. You've got a company that's trying to serve, but no one's really interested. And you're really in it to make money without that underlying serving of the people. And that's just not a long-term. Why? It's a get rich quick. Why would you want to get rich quick when you can have wealth for a long, long time? And you can have an asset for a long, long time. So if you want to make money, so what's happened now? So for a couple of years here, Roaring Kitty, you don't hear from him. And all I did is post some type of a photo where there's a video game guy here and he leans into it again. That's all he did. And now, here we go. That's all it took. Here we go. And everyone's buying it and they're going to try to trade it. And there's people getting a short squeeze. My prediction is this: it's not going to get as high as it did before because there's not as many people in a short squeeze position. It's got a huge short interest, but people are going to be much smarter about this time. It'll do the same thing because the fundamentals of that company are just not there. Unless they come up with a merger that uses their brand equity or, some innovation, the change in GameStop is going to have to come within that company to save it. So if you want to trade it, the best you can do, and I'm not going to do it, the best you can do is probably some type of spread trade because the options are so volatile and expensive. So you could do a spread trade if you wanted. There's probably some fat in there that you could do with some limited risk. And if you want to learn how to do that, go to StockCast Bonus and we can show you how to do stuff like that. But I will just tell you, for me, I'm going to stay out of GameStop and I'm going to do what I do well, and I'm going to own good, solid companies, and I'm going to get that dividend. I'm going to sell options that are likely to expire and not be so nutty and that are more predictable. So the lesson is one of temperament. There's stuff going on. There's this, it never frickin' ends, man. It's such a battle with the students. And once they get over the hump, then they're fine. They get a little bit of immunity towards the FOMO. Oh, something's going on. There's money to be made. I better do something or I'm going to miss out on this. There's a feeling that there's a windfall that isn't there. And that's what causes this stuff. And you got as big a chance to lose as winning it. It's just not how I like solid. I mean, feel the language, solid, consistent, value. Those words get me lit up like, yeah, solid, consistent, value, right? Producing things for people, quality, helping, serving. Those are words that I can bank on. Flash in the pan, spike, that's, I don't want anything to do with that crap. So, I don't give advice very often, but I will on this one. Just freaking run for the hills and let those people, grab your popcorn and watch the people make and lose and all that. But really take the opportunity to control your FOMO and to grow as an investor in your temperament and say, look, it's an education issue. It's a temperament issue. I'm going to buy good companies. I'm going to go long. I'm going to believe in American business, and I'm going to learn about insurance for the anomalies. So I'm staying out of GameStop. I made my money on that in the short, and I scratched that itch before all this crap happened, and I'm happy to leave GameStop and watch it die a peaceful death and natural causes, unless they innovate.
So I will have to go to the stockcastbonus.com so that I can learn about spreads because I really don't know anything about them, and if that's the way to do it.
Yeah, we'll introduce the idea of options. I mean, you got to learn options before you learn spreads, and we'll start that process with teaching you some options.
So is two questions that, and I know we got to go, but I get stayed away from GameStop because it's its own monster. It's not a typical short sell. It's its own beast. It's more of an entertainment gambling thing. It's almost for fun.
Great for education though, right? Great case study, financial statements and volatility and technical and detachment. Great education opportunity. Yeah.
But you also said that, if I heard right, making your money from short selling, there's a ethical problem with it for you. Is it all short selling, or is it just this situation?
No, it's not. It's not ethics. It's more of a philosophy, right? Like I mentioned, I'm short all the time. I have hundreds of, I don't know how many positions I have that are short. Many. I mean, thousands over my career of short positions, and I will have them next month. But think of it more this way: is if you're at an insurance company like Geico, and you make someone a promise for 6 months, a policy, that 6 months is going to go away. Well, you gave them value for that 6 months. It's just the value of that policy will eventually go away because it dies, it expires. So there's nothing wrong with that, right? There's nothing morally wrong. I've shorted stocks before. I have no problem with shorting stock. I'm borrowing something and selling it to somebody. What I have the bigger problem with is not a moral thing at all. It's a philosophical thing about, okay, I'm going to try to make money on GameStop where I'm really not going to produce any value. Every single short sell that I've done on an option is giving someone, the right to buy something from me. It's giving them some protection in their option or their opportunity they want. So there's value in those sales. Here, this is so far removed from, it's kind of lunacy, I guess. It's silly. And it's entertaining, and it was brilliant the first time he did it. It was fun to watch, and it was fun to see the hedge funds get what they deserved because they took risks that they were not covered on, and they left themselves exposed, and it was a David and Goliath. It was fun to see this guy do it, and it was a great lesson for the hedge funds. And it's not a lesson all of them have learned yet. But as far as what do you really want? I'll tell you what I think people that listen to this Stockcast want. At least I put it in the comments. I think people want, if you could have a asset column with really good, solid companies that serve the community, and you received income on a monthly basis where you weren't trying to buy a Bitcoin here and figure out where to sell it here, right? You weren't just always trying to depend on someone being dumber than you were to buy it at a higher price than you did. That's the only way to make money in capital gains, is someone will buy it higher than you did. And if that's the truth, then either they were smarter than you or dumber than you, right? You got to know when that top is. I don't like that. I'd rather have a piece of real estate that pays me rent, or a stock that pays me a dividend, or an option that pays me a premium on a monthly basis. And if you could just picture and imagine, this is why Stockcast Bonus is so important, because, we can show you how to profit now with cash flow stocks. That's really the theme at Stockcast Bonus right now, is how to profit now with cash flow stocks, to where if a person can imagine a life where they have a passive income coming in, they don't need to sell their assets low and high. They don't have to buy low and sell high and figure that out. You just receive that income each month above the expenses. Then you have your freedom and your time. And you don't have to worry about FOMO and messing with all this, GameStop, baloney. See, I'm using really, you can tell that's not the words I wanted to use. I'll call it baloney, but it's really smellier than baloney.
Yeah, Robert, I was like, blue skies.
Yeah, it's pretty crazy stuff.
Yes, in there. Yep.
Blue skies. I like that. Well, these are dark skies. I mean, there's more important things to get educated for. We've got problems in the markets, and we've got problems coming, and people in 401k are about to get wiped out. We have bigger fish to fry educationally than try to dink around with, GameStop and try to make a buck on that. There's just better ways to go. So that's my take on it.
No, I appreciate it. You didn't even rant it though.
I'm on the edge of it.
Yeah. You didn't yell at me.
Great job, Roaring Kitty. I'm a fan. He's having fun. He's got an audience. But you got to understand what he's doing. He's sitting in his chair. He's laughing his head off. Don't be on the wrong side of that laughing in your head off. Don't buy into. I mean, he's sitting around with his friends like, man, you think I can do it again? You think I can do it again? I mean, hey, so good for he or she or that group or them or whoever they are. But I'm just going to grab my popcorn and watch, and I'm going to focus on education, cash flow.
So if you don't want to be Roaring Kitty's puppet, you go to stockcastbonus.com and
learn some stuff. And even if you're going to participate in that nonsense, at least do it educationally. At least know what you're doing. And your best bet, you're not going to have a huge windfall, but your best, safest way, if you want to be involved and say you made money in it, do a spread trade of some kind and know how to delta hedge out of it if it goes wrong. So there you go.
All right. Well, we'll let you teach us how to do that at some time.
Good to see you, man. I've missed you. You've been in Europe and flying around and building business, and you got a lot of exciting stuff going on. So it's good to be back with you, my brother. I missed you.
Yeah, you too, man. Yeah, I should say hi to all my friends in Italy, but we'll talk about that later. I'll talk to you actually, I think a little later today. We get to have a call.
Yep. Awesome. We'll see everyone next time.
Thanks, man. Bye.
This podcast is a presentation of Rich Dad Media Network.